Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 11th August 2025. The government is expected to seek parliamentary approval this week for amendments to mining laws, primarily to enable state funding for acquiring critical mineral assets overseas. Approved within the government, the bill to amend the Mines and Minerals Development and Regulation Act could be introduced in Parliament as early as Monday. Punjab National Bank aims to improve its financial health by selling approximately 100 NPA accounts to ARCs, expecting a recovery rate of 40 to 50%. PNB is also targeting a total business of Rs 30 lakh crore by the end of the current fiscal year through strategic credit and deposit growth, with a focus on profitability and corporate lending. Tesla is growing its business in India. The electric vehicle company has rented space in Delhi's Aerocity. The starting rent is Rs 17.22 lakh per month. Tesla also leased a large area in Gurugram for a service center and sales outlet. The company is selling China-made Model Y cars in India. These expansions show Tesla's commitment to the Indian market. The Reserve Bank of India has issued the Co-Lending Directions 2025, enabling regulated entities to enter into lending arrangements with other regulated entities for the purpose of extending credit. Under the revised guidelines, each regulated entity participating in a co-lending arrangement will be required to retain at least 10% of the individual loans on its own books. This retention requirement is designed to ensure that all lending partners have sufficient skin in the game, promoting prudent lending practices and risk sharing between entities. The Reserve Bank of India has released the Non-Fund Based Credit Facilities Directions 2025. The guidelines set out detailed norms relating to the conditions under which guarantees and co-acceptances can be issued, along with specific requirements for other types of guarantees. They also define the regulatory parameters for partial credit enhancement to support creditworthiness in debt instruments. These measures are designed to enhance transparency and minimize risks associated with non-fund based credit exposures. Capital markets regulator SEBI has proposed a separate category of alternative investment fund or AIF schemes consisting of accredited investors, which will enjoy a lighter touch regulatory framework compared to regular AIFs. In a consultation paper issued on Friday, SEBI suggested that such accredited investors, AI-only schemes, could be allowed certain flexibilities given that accredited investors are deemed to have the knowledge, financial capacity, and risk appetite to make informed investment decisions without the same level of regulatory safeguards required for retail participants. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.